everyone. Welcome to Play Stocks. I'm very happy today to have Talal Debs from Zefiro on here. This is a very unique company, and I'm hoping today we can explain some of the big opportunity that I see. So welcome, Talal.
Thank you very much, Ron, for having me on.
Yes. So I guess to start off, maybe a little background about yourself and how you came about this opportunity to remedy these wells.
No, it's a good question. Look, I got my start in energy at J.P. Morgan in their natural resources banking group, and then in global commodities for many years. And I was always attracted to the specialty projects, and I had a opportunity to help forge the first foray into voluntary carbon markets back in 07, 08 timeframe, working with three people who are currently on our team, actually. Catherine Flax is on our board, Mohit Gupta, who is currently our CFO, and Tina Rain, who's our Chief Carbon Officer. And one of my jobs was to figure out what was the right kind of carbon credit that we would want to bring on board to a highly regulated and risk cautious company. And it highlighted for me at that time that carbon offsets, really quality is everything. And then fast forward to today, when I became aware of the huge methane leak problem associated with orphan and abandoned oil and gas wells in North America, that I was able to connect the dots and realize this was potentially a way to produce a really valuable and high quality carbon offset for many years to come.
Okay, no, that's awesome. Yeah, I know understand there's millions of these orphan wells, and so it's quite a large or massive opportunity. So what are the biggest challenges, because this is so big, like for the growth going forward, and how you plan to address this?
Yeah, well, I tell you, the scale really is remarkable. When we got started with this, when this was still on the drawing board, I think the EPA estimate of orphaned wells in North America was somewhere around 1 million wells, which is a staggering number of wells. Um, but we kept feeling like there was more. And as we sit here today, the estimate, same website, approximately 5 million wells. And
Okay.
they seem to be popping out of the woodwork. And so, yes, we won't have a problem for scale. We've got plenty of opportunity to clean up these wells. It does create a unique opportunity and challenge for us of how we grow into being a material impact on this giant problem, which continues to grow before our eyes. And that's actually one of the benefits of being a relatively small startup company. We've been able to think about efficiency and scalability with everything we do, and that's why we've been able to grow to the level we're at today.
Okay, and I guess for now you're just sticking in the U.S., certain states, because I imagine this problem's in a lot of countries. So,
Oh yeah, we're focused on the U.S. onshore and in Canada.
oh, okay.
Yeah, but that is 26 U.S. states and I think you know at least two provinces in Canada that we're focused on.
Okay, sounds great.
Yeah.
Yeah, so it's a pretty new company, but I noticed the last financials, you're already cash flow positive, profitable, and
Yes,
growing.
sir.
So I guess where do you see things in the next fiscal year? What kind of growth can we expect there?
Well, look, I mean, thanks for pointing out what we're so proud of, and we wanted to get to, obviously we IPO'd in April. We wanted to be in a position where by the time we were giving our first full year audited picture of the company to our investors, that we could really show what a strong base we've created. And we did release those earnings at the end of September. And that data is out there. I think the our finance team, headed up by Moet, did an amazing job of pulling it together. And we were able to report a little over 32 million of US dollars of revenue, profitable with an approximately 15 to 20% EBITDA margin, and on a free cash flow basis, on an adjusted EBITDA basis, we're positive. We're using a lot of our free cash flow to invest in growth, though, because when you look at our quarterly results, we've had 2 straight quarters of approximately 10% top line growth. And so I think, to answer your question, where we sit today is we have the basic bones of everything we really need: a fully integrated business. We have all the rigs, crews, and teams in place to be the largest fully dedicated uh, well retirement service business in the country, in the US. And in fact, we're one of the only ones that literally will turn away any other kind of work. It's all we do. And so we clean up these sites and I guess what I would say in terms of our growth trajectory, I think I started by saying the management goal was to get solid base created by now, and we've got that, and it's growing, and it's supported by significant cash flow and asset base. Now the goal that I've given my team, and which I should say we've all embraced as a group, is sort of a moonshot goal. And that moonshot, as you know, it's sort of how do you get to something that seems impossible? But this is an impossible. It could be an impossible task to catch up on 5 million orphan wells that are leaking, and that's a $500 billion price tag if you did it all today, roughly. So, how do you begin chipping away at that? And our view is, look, we plug several hundred wells a year now, and we want to be in a place where we're plugging 5,000 wells a year in 5 years. That's the challenge, and my team
Yeah.
is basically working around the clock to make that happen.
Okay, well, I can crunch some numbers on that at a later time, but what's the potential too as far as acquisition expanding that way as well?
Yeah, we definitely have a rich pipeline of acquisitions, as you know from our if you've looked, on our public releases, we've executed a number of acquisitions and transactions to get to where we are. So we've proven the ability to get deals sort of, in the pipeline and executed. Most importantly, we recently executed a purchase of a minority stake of our lead operating subsidiary, Plants and Goodwin, without having to use any cash. It's all, share capital deals, and that's a good reason for why we're public. Is, we really like to see the companies that we partner with and acquire on the platform get excited about what we're trying to do and what the future can be together. And so, the pipeline of acquisitions includes getting us a footprint in 26 states. We're currently in 4, so we need 22 more states in the U.S.
Yeah.
plus 2 provinces in Canada. So it's a target-rich environment, and we do everything. We look at each opportunity. Um, it's highly specific, but sometimes it's better to build your own platform and stand up rigs and hire a team and get it all built organically. And if we do that, we can do things very inexpensively. Sometimes it's better to go ahead and come alongside an existing operator like we did in the case of Plants and Goodwin. So we look at both opportunities continuously. We also look at adjacent acquisitions that help us build if you like, the toolkit to go chase this opportunity. One of those was the deal we did with Future, which is a tech company that was spun out of a much larger environmental technology company called Expansive. Expansive is kind of the big scale leader in the space of carbon credits and associated markets, and they really have their hands in most of the key developments in that industry. And so we're really excited to do a transaction where we're working with Future to help scale our tech game so that we can have the data that we can use. And also, we have data that's just intrinsically valuable for all of our customers and clients.
Okay. No, that's great. If you can use your, stock for currency, that always helps. Uh, I think one of the issues is, and especially retail investors, I think, they don't really understand much on this carbon credit market at this time. Uh, so I was wondering, when you remedy a well, does it then create credits? Does that continue for months, years, or is it just one upfront lump sum credit?
So the answer to the question is really depends on the investor pool and the product they're buying. One of the products that we'll be issuing in shortly, we trust, is a methodology that was put out by a registry called the American Carbon Registry. That particular contract includes a lump sum award of credits at the upon completion of the cleanup.
Hmm.
But we expect that as this market matures and additional contracts come into the market, certain buyers will want to see a different crediting period. They may want to see different particulars. And, we're building our data and our tech and our operations to be flexible to handle, whatever the right best contract is for whatever the investor pool and application is.
Okay, yeah, so a lot is still kind of developing more to mature yet, by the
Yes,
sound.
sir.
Yeah. So I guess too, you'd get more credits on how bad the leak is or the amount leaking, and also I was wondering, methane's, worse than CO2. Is there higher credits for that versus CO2?
Yeah, so methane is definitely a much more damaging greenhouse gas than CO2. And in fact, it's not just the global warming potential of methane that is a problem. Unlike CO2, methane actually is, it's volatile, it combusts, as you know,
Yeah.
and it has all the attendant problems that any hydrocarbon has. It can cause all sorts of health problems. It causes risk to structures, and let's remember the methane that comes out of these wellheads when they are leaking isn't always just pipeline quality, pure, clean natural gas. This
Yeah.
is a key component of natural gas, but it often includes all sorts of impurities that you don't really want to have floating around where people and the natural environment are exposed. So, for that reason, the methane reduction offsets we get do get a much higher multiple of value as against their carbon equivalent volumes.
Okay.
Maybe that particular conversion could range from sort of 25 to 84 times based on the current understanding of that market, but broadly speaking, it's many times more, at least 25 times more problematic than CO2.
Yeah. Okay. Oh, that's awesome. I know you've been a buyer of the shares and financing in the public markets, I've noticed. So I guess kind of to wrap things up for investors, maybe you can sum up what you see as, the investment opportunity for someone just looking at the company now.
Look, I'm passionate about the opportunity, or I wouldn't be here. And so any of that, buying that you mentioned is just born out of my feeling that the best is yet to come. That said, I don't expect anyone to trust me for anything, but just to look at what we've done and look at what the team's accomplished, and then spend some time studying that big methane leak problem, a big orphan well problem. And I think once you have got your arms around the true scale of that, I think that's where this really unlocks as an exciting mission. And I think it's why people have joined our team, and I think it's why people buy our shares. So there aren't very many opportunities for a sort of environmental mission-driven business out there that can scale from where we're at to where we're going to be. Hopefully, 10 times our current size is what we're wanting to be, and we actually, have a good shot at doing it. So, uh, really appreciate your opportunity to let us, get out there and have people look at our story.
Yes, I guess one final question on competitors. I guess there's really nobody else getting the carbon credits on these abandoned wells yet. No one else is doing this, or?
Well, I mean, that's not strictly true, and if it were true, it would be a bad thing. We want to have a market with lots of participants, right?
Right. Okay.
There are definitely players out there. It's potentially a very, very large market, so we don't worry about market share. In fact, we're glad to see competitors out there. We see more and more people coming into this market. I think where we differentiate is that we're the only fully integrated that really goes all the way from the carbon credit sale, through the issuance process, and then we own and operate all of the cleanup equipment ourselves.
Okay.
And that fully integrated nature allows us to really manage our costs and deliver, the lowest cost, highest quality offsets. We think that are going to be out there.
Okay, great. Well, thanks a lot, Talal, for coming on and giving us your time and insight here. Look forward to, doing this again.
Thanks, Ron. Me too. And have a great weekend.
Okay, bye for now.
All right. Bye bye.